Hey everybody, what's going on? It is James here, and I wanted to sit down this morning and shoot a quick video talking more about relative strength. I talked about this in a previous video. I'm going to give you some more examples in this particular video, and we'll start off with this chart here. So this is a chart that I posted a few days ago inside of my Discord, and essentially what this chart was doing was measuring Bitcoin strength versus gold. And so we can see that Bitcoin actually made a double top back in 2021 and then retested that double top in December of 2024. Right here was the high. And what we actually had going on is the same thing that we had going on in 2021 versus the tech market. Even though Bitcoin itself has been making higher highs versus the US dollar, which we should be able to see if we look at a chart over here. So if we look at just purely Bitcoin versus US dollar, we're going to see that we made a higher high. But Bitcoin versus gold, we made a lower high. So that is a bearish divergence on Bitcoin. And of course, what you would expect to happen is you'd expect to get some type of pullback. It doesn't necessarily mean the top is in, although it's not looking too great right now. But it is an indication that there's weakness in that market. All right. And so what happens with markets that a lot of people don't seem to understand is imagine there's like a bucket of water, and this bucket of water is just flowing throughout the markets. It's the same water just sloshing around from one part of the market to another part of the market. That's essentially what is happening. So money just sloshes around the market. It moves between sectors. Money doesn't just disappear. And typically it's not created other than when the government, prints it, essentially. It's just moving between sectors. So when one sector shows weakness, smart investors and hedge funds and algorithms and all this stuff, they will rotate out of that sector into a different sector. And so sometimes it's, the tech stocks are hot. Sometimes it's cryptocurrency. Sometimes it's precious metals. Sometimes it's, commodities. All these things, it just rotates. All right. And so what happens is you get relative weakness and the money rotates away, or relative strength and money rotates in. So this is an example of Bitcoin versus gold. But what a lot of people are not paying attention to is U.S. equities. There's this underlying belief by a lot of market participants that the U.S. is just unbeatable and that the U.S. market is just, the end all be all. And as somebody who grew up in the 80s with, lots of propaganda about the U.S. is the best of the best of the best, I love my country, like most people who were, raised during that era. But I'm also a realist. And the reality is this: the U.S. markets are not the end all be all, right? They are just one of the many markets of the world. And especially as, other markets develop and emerge, like we have to pay attention to those markets and realize that there's a possibility that money will flow away from the U.S. markets into some of these emerging markets. And so for an example, if we go take a look at this chart, right? This chart here, this is actually looking at the SPY, which of course is an ETF for the SPX. And it's measuring that on the left-hand side. It's measuring that versus basically a similar equivalent for European stocks. Okay. It's the Stocks Europe 600. It's kind of along the same lines there. And so what we're seeing again is the same thing that we just saw on Bitcoin versus gold. We're seeing that the SPY is making higher highs versus the US dollar, but in reality, the SPY is actually putting in a lower high currently versus the European markets. That means there could be some potential weakness there. Also, if we look at this, we can see that the SPY has been putting in a bearish divergence on RSI versus the European markets. We can see that the SPY has been putting in a bearish divergence versus the US dollar. So all of these things kind of go hand in hand to paint this narrative, or in this picture, that US stocks may not be as strong as a lot of people believe them to be. And of course, that's a bad thing, because if the US stock market has a rough time, we know historically speaking that risk on assets tend to go down very, very quickly. And of course, cryptocurrency being one of the most obvious risk on assets there is. So again, this is just the side by side. This is Bitcoin versus gold, lower high. Bitcoin versus US dollar, higher high. And then we can look at charts like this, for example. This is gold versus the US dollar. It looks very, very toppy. But at the same time, when we look at gold versus VTI, and VTI is an ETF that tries to encompass most of the US stock market, we can see that it actually looks like it had a bubble back here in 2010, 2011, and then dumped. And it looks like it just went through accumulation. And we could actually be looking at the early stages of what could set up to be a new bull market on gold. Now, again, this is a relative strength chart. And what that means is it doesn't mean gold goes up versus the US dollar. It means gold is poised to go up versus stocks. And a very simple way for that to happen is for the stock market to melt down and gold to either stay flat, in which case it gains ground versus those stocks, or for gold to also crash, but not crash as significantly. So for example, if gold was to crash, 33%, or even 40 or 50%, let's say it went all the way back down to these levels, back down to this 61.8 area, right? That would be a crash of ballpark 43%. Well, if gold crashes 43%, but then the stock market crashes 50% or 60% or 70%, etc., what you'll see is you will see gold moving up on this relative strength chart because it's gaining ground versus VTI. I mentioned in previous videos, and I've been talking about this for a number of years now, how critical it is for most people to really start paying more attention to relative strength charts instead of looking at everything in terms of US dollars. The US dollar has been a great benchmark. It's obviously been, essentially the world currency, but things are changing. And, that's just the reality of the situation. The US dollar was significantly weakened by the government actions back with all what people thought was free money, and it was obvious to anyone with a basic brain that it wasn't free money. It was going to be very expensive long term. But with all those handouts coming, creating, basically inflating the cost of goods, the US dollar lost a lot of its purchasing power, and it really weakened it in a big way. And so rather than looking at everything through a US dollar lens, I think it's really important to look at it and realize that we essentially I look at markets as a shell game, right? The big players are simply moving the pea between the different shells. And so our job as investors and traders is really to figure out what shell, right? Which shell do we need to lift up to find the ball or the pea or whatever they're hiding there. And if you can do that, you can do very well. But if you buy into the notion that, if you buy into the notion that you're trading in a vacuum, it's very difficult. You have to understand that money is not being created and destroyed. It's just simply being moved around. So I'll keep the video short. It's a little after 6 a.m. on Monday morning, so the market's going to be opening in a couple of hours. And it's been an interesting weekend for sure, especially for cryptocurrency, which has now taken back its entire move from that Friday rally that came on the back of the Fed hinting at potential rate cuts. So it'll be an interesting week for sure. Be sure to give the video a thumbs up and subscribe to the channel if you haven't already. Also, please remember to always trade safe. These are very, very volatile times, and you don't want to be caught, holding the hot potato, so to speak. As always, remember, I am some guy sitting in a spare bedroom, which means that nothing in the video is financial advice, and you should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other tradable asset.